We are still very positive on Asia and emerging markets, broadly speaking. And I think the market is kind of expecting the worst. It's been a tough year for this part of the world and for emerging markets. And China in particular is down 20% this year. So the market's priced in a lot of negatives, whether it's the trade war, whether it's the Fed raising rates, a strong US dollar, higher oil. But all of that narrative is starting to change a bit. And so we think any little bit of good news, the market will react very strongly.
Even if we just get a pause or a ceasefire rather than a substantive deal here?
I think so. I think that the expectations are pretty low. I think any sort of truce would be received very well by the market. And the fact that we don't go into a full-blown trade war where the additional $267 billion of Chinese goods are exposed to the tariff, then that would be a good outcome, in fact.
Let's talk about what is happening in China, because I know you are invested in a few sectors there. I mean, there is some concern out there among what is happening just in the growth landscape in China, and that perhaps that might force President Xi to give in to some of President Trump's demands. Do you think that is true?
I don't think he's looking to give in. I think if you look at the big picture, the growth is slowing, but it's not slow. China's still growing above 6%. It's one of the strongest growth rates in the world. And you know, when we look at China, China's a big place. It's a very complex market, so you have to be very careful. About 6% of the revenues of Chinese companies actually come from the U.S. So domestic China is the real driver here, and as investors, that's where we're focused. We're focused on the companies that are exposed to the domestic economy, to the local people that are, you know, going to the supermarket, buying property, buying cars, you know, living their life irrespective of what's going on in the rest of the world.
Is there such thing, though, as a trade tension, a trade war-proof sector that you can invest in? Because ultimately, are consumers across the board in China getting a bit nervous?
Yeah, I think, you know, the two of our strategies at Eastspring that have been very popular have been our Asia low vol and our Asia equity income strategies, which are more defensively oriented. So we're looking at sectors like telecoms, utilities, areas that are purely domestic, real estate. And those areas have held up well. The banks in China have actually been a good place to be this year. Last year wasn't so good, but this year the large cap liquid banks have held up very well, and we still see good value there. So we're very much focused from a bottom up perspective, looking at companies from, you know, one by one.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.